Hello, and welcome to another episode of the Markets at a Glance series. My name is Rupas Kamau, Markets Analyst at FX Pesa. So today we'll be talking about the current events happening in the markets, the key assets that are making the major trends. We'll be trying to understand the key market formations. And once we go through these, we'll also be looking at the major news. We'll be looking at the economic calendar and try to project where the market might be headed next. So once you join in, you can just say hi on the live comment section, and these will confirm that everything is working just fine. So as usual, I'd like to begin with a disclaimer that this session is educational. It's not investment advice, and it's not a recommendation to trade. So if you have any questions related to the presentation today, make sure to type them in the live comment section, and I'll be responding as we approach the end of the presentation. So we know that a lot of things have been happening, and I think the key major trends includes the current breakout in gold, SP500, the NASDAQ. We have seen the EURUSD going for an all-time high, as well as the UK's benchmark index, or what we call the FTSE, FTSE 100 index. So hello Lamik, hello Billy, as well as Molenga. Thank you guys for joining. Let's do this. So I'll be starting with the charts today. I know normally I start with the economic calendar and stuff, but today we'll be starting from the chart and then go the other way around. So what we are looking at here is one very important chart. And this is a chart of the USDJPY on the 15 minutes chart. And as you can see, for the last 2 days, what we've been experiencing is a market that has been moving sideways in what looks like a symmetrical triangle. So in a symmetrical triangle formation, we know that it's a consolidation zone, and the overall price action movement seems to be moving sideways. So we can say for this period of the last 3 days, the movement of the USDJPY has just been sideways, which is usually the period you want to avoid trading and participate in the major breakouts. And this is when we have impulse market movement. So this has happened after the market formed two tops that are almost equal, around 151.847. So from the forward chart, this is how it looks like. So we had a dip for 1 week, then it took 2 weeks to recover, and we broke the previous high. So as you can see, the previous high that we had experienced a few weeks ago was around 150.82. So we broke and formed a new high. Then the market pulled back, retested that high, broke it for a while before resuming price action higher. And since then, it has been a sideways momentum. So on the 15 minutes chart, I was tracking this potential breakout. It happened about 45 minutes ago. But then immediately after that, we have seen the price pulling back. And this is happening very close to the open of the New York session. So we know that the New York session will be opening in about 26 minutes from now. And there's a good potential we'll be seeing some impulse movement happening from this. And there is a good chance we could be seeing the market making a break and going for the previous high. So one potential outcome for this particular movement is that the market eventually closes higher and then heads all the way up to this area of 151.847. So we remain patient. Remember, when we have a breakout immediately and the market changes direction immediately, then that's not a confirmed breakout. So in this case, we remain patient and see the price action towards the New York Open. Maybe by 5 p.m., we'll have a direction. So besides that, we know that the dollar index has been taking some steps backwards, and this is since yesterday. So after making some pretty impressive recovery and closing on a high last week, you can see the price action on Monday was pretty negative, price just moving downwards. And today, a continuation of the same. So we can say that the overall movement of the dollar index has been pretty bearish for the last 2 days, for this week. So this is most probably a summary of the price action for the last 2 days. So after the open of the week, we've just been going down after closing on a high last week. And this may explain why we are seeing this kind of price action happening on USDJPY currency pair. So the other interesting currency is US dollar trading against the Swiss franc, which made quite a strong rally after the Swiss National Bank, or the SNB, decided to suddenly or abruptly cut interest rates by 25 basis points, leading to a weakness of the CHF. So what happened led to this big spike in price action. And the price kept going up or up to the end of the week on Friday before pulling back downwards on Friday evening. So since then, you can see what happened. So price rallied on Friday and then lost and moved back downwards. And once we got to this area, you can see on Monday, the price opened and attempted to break this trend line, eventually closing on a high. And today, all we have been seeing is a continuation of the bullish momentum, knowing that US interest rates might stay higher for longer at 5.5%, while for the CHF, we are experiencing 1.5%, and that basically creates a carry trade, which drives USD CHF currency pair higher. So our projection since last week was this area here, which was acting as support here, turned into a resistance and a resistance again. And now the price is attempting to reclaim that level. And this is a price level of 0.91. So there's still more room for upside, and we could be experiencing this happening towards the end of the day today, or perhaps extended into tomorrow. So there's still more room for upside in the USD trading against the Swiss franc. The next part, or the next most interesting asset in the market, is Brent Oil. We know there's a couple of things that have been happening. So on one side, we discussed the current issue with the Red Sea, where ships are not finding it safe to cross there because of the geopolitical risks of being bombed by the Houthis. So a lot of these ships are going around Africa, which is adding a premium on the price of oil. Then we saw the second factor being Ukrainians bombing Russian oil infrastructure. And with more than 7 oil fields already being bombed, basically strikes a big worry on the supply of oil. And this creates some force or more demand, which pushes prices higher. So we also saw the Chinese industrial production suddenly increasing, which raises the demand outlook, presenting a potential for oil markets moving higher. Then we saw the US crude oil inventories, including imports from Iran, all going down. And with more scarce oil, then there's a high likelihood that we will be seeing prices moving further upwards. Now, today, we have had yet another event. And this is the bridge that was taken down in Maryland. So with that bridge, which serves a major port in the US, which also serves major oil shipping companies, then this has the potential to disrupt some oil supply. And that adds to the tally of factors that are supporting a strong bull market in oil. So what we have been experiencing is a flag. And I remember describing this flag to you during the market snapshots. We had a very strong bullish momentum in oil, and then market started trading in this flag. So the flag kept playing out for a while. And then we had a signal when the market was unable to form lower lows. So from the flag, you can see the market was forming lower highs as well as lower lows. But then upon reaching this area on Friday, it started forming higher lows, indicating signs of breaking upwards. So we had a slight break on Friday before price pulled back downwards. Then on Monday, we bounced from here. Market went up, pulled back, and then broke this particular resistance and kept going higher. And now we are seeing a sequence of higher highs. So today being Tuesday, the 26th of March, price opened pretty strong, attempting to go higher, but then pulled back downwards for a while before recovering. And now we are seeing some form of consolidation being the order of the day. So here, what I'm looking at is a market that has just been moving sideways for almost 24 hours. And now, as we approach the New York session, there's a good likelihood that the market would potentially break either of these two limits. So we have the resistance at 86.349 and the support somewhere around 85.757. So for now, it seems more likely that the price will be pulling back downwards towards this area here, but that doesn't change the overall outlook, which is pretty bullish for me. And judging from the candlestick that we just saw in the last 4 hours, there's a good likelihood that the market will pull back for a while and then continue with a strong bullish momentum. So remember, the target is the previous high. So we could be seeing oil prices making a strong rally and eventually getting to $87.015 per barrel. So this current pullback might be temporary, and we could be seeing an overall gain towards the end of the day. So perhaps we check on the price action at the top of the hour, and that should be at 5 p.m. If it confirms my idea and crosses higher, then we go for it. But then if it keeps going downwards, then we wait until we see signs of bullish momentum. So as for US equity indices, we are seeing a very strong momentum, which ended last week. And then at the beginning of this week, what we are seeing is a continuation of the same. So for the NASDAQ 100, if you go to the 15-minute chart and then you zoom out, then you'd notice that we had a consolidation playing out here with a lower trend line following that path and the upper trend line following this path before the trend line was broken last night. Then the market pulled back for a while before bouncing and moving higher. So this creates the perception or the expectation that the market could eventually push further and attempt to create a new all-time high. So the all-time high is just recent. So we could be seeing the market going for a new all-time high here. And this could happen as soon as the current New York session. So there is a good likelihood that the NASDAQ eventually forms a new all-time high, even though we are seeing some form of pullback happening right now. So all these assets or major US equity indices are currently trading at near or at all-time highs, and this could extend through today. So we are seeing the Dow Jones as the weakest. So as per my analysis on Monday, I was expecting this area, which was a resistance, to act as the support. So yesterday in the evening, price bounced from here, didn't quite get to our target. And this may explain why we are seeing the same thing here. So the idea is still the same. The market gets to the lower trend line here. And then once it gets here, then we start looking for signs that the market will continue making this bullish momentum towards a new all-time high. So the idea is not to buy immediately the price when the price gets here. So the idea is to look for potential signs that buyers are entering this market. So that might include something like this. So if you see, let's say a candlestick such as this one, this is a pin bar, candlestick with a small body and a very long tail towards the lower side, indicating a rejection of lower prices might be the signal to now go for a bullish position. So it's all about being patient, waiting to see what happens to the price action around this area. So for the S&P 500, it's a similar story. So we had a breakout, but now the price is pulling back. So now we observe this area again, which has been acting as support since yesterday. And you can already identify these here. So we are seeing some strong bearish momentum here. So if you're short, you're good as per now, but then we'll still observe this area to see if there's any signs that the price reverses and continues the bullish momentum. So then we have other equity indices, including the EUROSTOXX. So for the EUROSTOXX, the flag bared some good fruits after the breakout yesterday, then sideways momentum, and then today's bullish momentum. So in this case, we are seeing the market breaking a new all-time high. So from the daily chart, you can see it's a very strong bullish momentum. From the 4-hour chart, you can see we just recovered from a dip. So this was the dip here. From this high, market goes down and then back upwards. And now we are seeing some form of rejection, but the market has already created a new all-time high compared to the previous high here. So there is a good chance that we will be seeing some more continuation. And if you look at previous cycles, you'll notice this, that once the market hits the previous high, pulls back for a while, and then breaks and continues moving higher for proceeding periods. So we could be seeing something similar to this, and I'll try and highlight here. So market breaks out, forms a pullback for a while, then continues higher. So it's a similar thing happening here. We don't know what will happen, but if that's the theory, then we remain patient and see if the market eventually cruises above this area. So also for the FTSE 100 or the UK 100 index, this is how it looks like on the daily. So we are not yet at the all-time high price of 8,044. But then judging from the price action here, you can see we had a major breakout. So these were the major resistance areas here. This one was lower, and then the market eventually broke through these resistances within a span of 3 days. So from the forward chart, you can see the momentum of last week and how the market ended the week. And then this week, market started by pulling back downwards, but now we are recovering again. So from the 1 hour chart, this is how it looks like. So some slight selling towards the end of the day on Friday. Monday, some further back downwards selling. But then today on Tuesday, it seems like a strong bounce. So using a much shorter time frame, in this case, the 15 minutes chart, then you can see that we already had a break here. And now the market is looking to progress even higher. But before that, it seems like the market is going back for a retest. And of course, we know that there's also a support area here that was holding as the low of today as well as yesterday. So in this case, we will be looking for signs that the market is looking to bounce from here. And if we happen to see that, then it might be an idea to now start looking for bullish positions if the market was to make a strong bounce from this area and then head higher. So also a case of wait and see. So having seen the dollar index being pretty weak for a while, that may explain the pullbacks here. So for EURUSD and Pound USD, I remember on Monday, we projected that the price would bounce from this lower trend line and at least get to this previous bottom here. So we got there, and then today we proceed to the next level, in this case, a price level of 1.08613. And if we break above this area, then the idea is that now the market goes for the next level, which is around 1.0887. So there is still more room for upside potential for EURUSD, and this is based on the current weak dollar for this week. But then at some point, I expect the dollar to resume the bullish momentum, which would mean that the price eventually reverses and gets back towards the previous low. So we don't know this yet, so we follow the prevailing trend for this week, which is these major currencies gaining against the dollar. So for Pound USD, it's a similar thing. We projected on Monday that the pullback will eventually come back to retest this area, which was serving as a major support at 1.26676. But then we eventually got to that area today. And if you observe the price action, when the price got to that area, there was a strong rejection, and it seems like the dollar is regaining strength against the UK pound. So in this case, if this happens to be the strong rejection area, then now the target is back downwards, which would be a bet on a strong dollar. So from the price action of the last 2 hours, we can already see that there is a strong entry by sellers. These two red candlesticks are indicating a strength of the sellers, which means that the pound may now be headed back down after retesting this support and now turned into a resistance. So as for USD CAD, we are seeing that this was a major resistance. So we discussed these on Monday. So we saw that the market was facing a very strong rejection of that resistance area. And there was a 2 candlestick here indicating a strong entry by sellers. Though the market was stubborn and decided to retest this area here, at the end of the day, we kept going down. So today has been a similar story, and the US dollar is continuing to lose against the Canadian dollar. And we could potentially see the market making a huge drop and boarding the area around 1.35 to 18. So checking to see if I missed something here. So as for Bitcoin, what we are seeing is a break outside of this triangle. So remember what we said with the triangles. In this case, the overall price action movement was sideways. Then after this break, we saw a very strong acceleration yesterday. Then today in the morning, at the open, there was a slight drop, and then the market accelerated to move higher. And then you can see the persistent attempts to move higher. And there's a good chance we'll be testing a new all-time high, either today or tomorrow. So the all-time high for Bitcoin is slightly higher just here at 73,758. And now we are at 70,922. So there's still more room for upside momentum, and this is majorly as a result of the ETFs buying more of the supply in the market, therefore leading to higher prices. So there's still more room for about a 4% gain that would see Bitcoin hit a new all-time high. So as for the French 40 index, the flag remains. Nothing has changed in this flag. So we'll still be on the lookout for a potential breakout. So a breakout would either happen above the blue trend line or below this. So as far as we remain within that consolidation, then we continue holding until we find a clear opportunity to either go long or short. But then judging from the price action that we are seeing with the European equity indices, there's a good chance that the market could eventually break towards the upper side. So the breakout hasn't happened yet. It's something that you simply follow at the top of every hour to see if the market has closed above or below. And then once your signal is activated, then you strike your positions. So also pound yen, after getting into this consolidation, it gained a little bit against the yen, and then started moving sideways. So I wouldn't say there's much happening in the pound yen. So this is a market that has been simply moving sideways since the open of the day. So I wouldn't call this a very strong price action. So the activity here seems more of an average sideways momentum. So we'll still be waiting to see whether there's a major breakout. So as for the Chinese yuan, the dollar has been gaining strongly against the Chinese yuan. It did that last week. Then at the open of the day on Monday, you can see a big drop with the yuan starting to recover. So from the area it bounced here, you'll notice that it was a previous high twice and now turned into a support. So after the big drop, market found support here, went up and then back down, and now it's attempting to go up. So what we are seeing overall is the Chinese yuan being pretty weak against the US dollar. So main reason that this is happening is because China is currently cutting interest rates, printing more yuan in what we call quantitative easing in trying to support economic recovery. So while the US has continued tightening policy and holding rates higher for longer, China has been cutting interest rates and trying to stimulate lending to basically support its real estate sector. And with this happening in the markets, then it has led to the Chinese yuan being pretty weak against the US dollar. So there's still more room for upside. So if you track the 1 hour momentum, then you notice that this was a very strong rejection of lower prices, and eventually buyers are coming in. So there is a good chance that we continue seeing upwards pressure on prices. So as for the Hang Seng index, it was on a multi-year bear market. Managed to find a really nice bottom here. Notice the previous bottom here. So we bounced off this area here, and since then we have been seeing a very strong bullish momentum, and I would say it has lasted about 10 weeks. So since then, the market has found some weaknesses, attempted to go down, failed, and now we are seeing an attempt to move even higher. So from the 1 hour chart, you can see that we've had some good momentum early in the morning before starting to erase some gains, but there's still more room for upside. So in this case, I'll be betting that the Hang Seng index continues with the recovery, and we could be seeing this happening towards the end of this week. And it's quite clear for everyone that this cycle is not complete yet, and we are currently on an upswing. So we just moved from the lower trend line, and there's a good chance we'll be heading much higher to the upper trend line. So for the China A50 index, it's a similar story. So from the daily chart, it was a strong bearish momentum. So if I zoom out, you'll notice that it's a multi-year bear market since 2020. But then we found a very nice bottom here. And after the bottom, notice that price has been consistently moving higher. So it has been a very good year for Chinese equities. And I would say in the last 10 or 12 weeks or so, what we have been experiencing in this index is a major boom in prices. And this rally seems to be unstoppable. So a very strong recovery by Chinese equities. And now the market is on the verge of forming a new high. But if you go to the 1 hour time frame, you'll notice that there is a major resistance shaping up here. So try and remove this. and then focus on the most recent close. So most recent close, if we look at this area here, this seems to be following a path along here. And now, if I zoom in, you notice there was an attempted break, market reversed immediately. Another attempted break, market kept pushing higher. So we just got to the upper trend line, and now we're headed to the lower trend line, but then it's still bullish. So in this case, we look for signs that the market is headed higher before executing bullish positions. So that's it from this side, and from Japanese yen, or the Nikkei 225 index. This is the Japan's, I would call it Japan's benchmark index. So we're on the verge of forming a very familiar pattern called a cup and a handle. So a cup and a handle will have what we call a neckline. If it's horizontal, the better, but sometimes it can be slightly slanted. So this is how it looks like. So you'll notice price moving from here down and then back up, forming the cup, down and now headed higher, which would now complete the handle, which means that price is likely going to hit this area here. So that's on the 4-hour time frame. So if you go to the 1-hour time frame, then I can zoom out and then we visualize these together. So the handle is just beginning to form, and the potential price action could lead us to getting to this price level of 41,370.68. So there's still more room for upside. So we remain quite optimistic on this one. So that being said, now we can take a quick peek at the economic calendar, try to understand what's the major news for the day before we end the session. I'm seeing there's quite some significant feedback on the comment section. So I'll be going through it shortly. So hello, Simon Gitao. I can see that was epic. That's a username from one of the commenters here, or participants. Hello, Tony Dark. Hello, Patrick Trapsked. What's the most trending pair of the day, and what's the most promising pair for the week? I think quick answer for this question here. Most trending pair of the day would be USDJPY. Seems to be the more likely to break out. So after this triangle on the 15 minutes chart, breaking out here and heading here is more likely. Most promising asset, I believe it would be gold. So after the major breakout here and the pullback, then the potential remains that the market could come back here, retest this price level. And then once it retests, then we potentially see a strong rally going for another all-time high. So we could be seeing something like this happening. So market pulls back after hitting 2200, maybe goes down to around 2183, then that is all the way up to 2211. I hope that answers your question. Sorry, I wasn't sharing that. So this is it. Gold, after making a breakout here, pulling back downwards, it could potentially get to 2183. Then we look for signs for bullish entry, and then a rally towards a new all-time high, which is above 2,211. So this seems like a potential. And then for the USDJPY, after this triangle was formed, and then the break here, there's a very strong expectation that the dollar eventually rallies and we push to this new high in USDJPY currency pair. So I'll be answering more questions as we look at the economic calendar. So we know that we don't have much news. So that's why I started by focusing on what's currently happening on the charts. So Monday, we didn't have any major news. Today, BOJ core CPI came in weaker than expected at 2.3%, meaning the potential for the Bank of Japan going for more rate hikes, for more rate hikes remains significantly low because inflation is not holding as they had expected. So CB Consumer Confidence Survey at 5 p.m. is the expectation. It's the only major news we're expecting for the day, as well as the Case-Shiller Composite 20 Index. This one is already out. So I can just refresh my chart and then look at the data. So this one came in at 6.6% as expected. So we don't expect any major movements. Housing price index at negative 0.1%, meaning that housing is cooling off or cooling down. I also saw a tweet earlier in the day showing that US home prices have really gone down by about 20% since the beginning of the year. And this is indicating softening job market conditions, or basically demand for housing going down, leading to much lower prices for houses. So core durable goods came in stronger than expected, and this was the major highlight for the day. So United States durable goods orders, I'm hoping everyone can see these. New orders for manufactured durable goods in the US rose by 1.4% month over month, and that was in February 2024, more than the market expectations of 1.1% increase after a downwardly revised 6.9% fall in January. So this shows some good recovery, especially for durable goods orders. So after the big dip that we had here in the month of January, February has shown that the sector is making a strong recovery, which is a good indicator for the economy, good indicator for the industry, but bad indicator for the Fed, which is currently fighting inflation. So among other key highlights is that stock futures in the US were higher on Tuesday, with contracts on both the S&P 500 and the NASDAQ rising about 0.5% and the Dow Jones gaining 90 points, rebounding from losses in the previous session. Traders await key economic data to assess the economic performance and adjust bets for the timing of the Fed's rate cut. So durable goods orders came in better than expected for February, and the Conference Board consumer confidence is also due later today, but the big focus this week will be the PCE inflation on Friday. Meanwhile, comments from Fed officials have been sending mixed signals, with the odds for a rate cut in June currently standing at around 70%. So on the corporate front, Nvidia was up about 1% in pre-market trading, and Micron Technology added 2% after closing at record levels on Monday. So if you look at the CME FedWatch tool, you'll notice that for the next meeting, which comes up in 36 days, there is a 92% probability that the Fed will hold interest rates steady. So the forecast for investors is on June 2024. So on June 2024, we're expecting that there will be a rate cut, and the chances are about 64.4%. And that's a lot what a lot of investors are currently focusing on. So that being said, I'll be answering a couple more questions before we end the session. I can ask about gold. The prices seems to be going up, but resistance is where? I don't think there's any major resistance in gold. When you're exploring new all-time highs, you don't have candlesticks on the left. So in that case, you might use the prevailing market patterns to try and project the next extension, or you simply just follow the trend and buy the dips. If the price pulls back, gives you more opportunity to make an entry, and in that case, you expect to see even higher prices. So there's a good question from Patrick. How impactful do you think the currency strength meter is? Do you think that it should offer much guidance in someone's trading activity? Does a strong, weak currency indication play out in reality? So the currency strength meter is a lagging indicator. It doesn't tell you where the currencies are headed. It shows you what has happened. It might be useful in one trader's model and not useful in another trader's model. So it depends on how you approach it. So an example, if you look at the IG client sentiment survey, This indicator basically shows you the direction that the traders are allocating their positions. And since it's retail clients, you can take some take homes from this indicator. So blue here means the long side, and red means short. So it's in percentages. And as you can see, traders who are trading USDJPY, the retail traders, they have a much higher percentage of people who are on the buy side compared to people who are on the short or selling side. So it's also the same for German 30, French 40, the FTSE 100, and these are pairs we have checked today. And it shows that most of the time, these retail traders will be wrong. So if a lot of retail traders tend to be extremely short on an asset, there's a likelihood that it will be moving in the opposite direction. So by them being extremely short on USDJPY, if you look at USDJPY pair, you notice that it has been going up. So in that case, this is a much better indicator because it tells you what's currently happening in the markets compared to the other indicator you are checking, which could be wrong on so many ways. And by wrong, it basically means it's showing you the history, but not where the currency is headed. So apologies, Apollo. I haven't checked on this. I'll check on it and then I'll present it. You are preparing something for bullish banter with Jesse. Yes, we will be presenting that shortly, hopefully by the end of the week. So I'll be sharing that. I think we have already covered EURUSD. So the comments I'm seeing about what about EURUSD, I believe I've already addressed them. If you would like to rewatch the session, it will be available live on YouTube even after I end the session. So there's a good question here from Lamik. What's your opinion on Trump media and tech company trading on NASDAQ? Is it wise to buy the stock now? I believe there is stocks with a much higher beta than the Trump media company. So if you can get your hands on companies like, I would say, what do we call this social company? There's this red hot. There's this company that just did an IPO. Anyone in the house to comment on the name? Yeah, Reddit. Reddit just did an IPO, and I think it's performing well. Yeah, it was up 30%, and that was just yesterday. And today it's expected to open even higher. So you can see Reddit shares rise 30% to start the week after the listing. So we could be seeing some further upside potential in Reddit. So there's also other companies making major news. So I don't think the Trump company is like the top stock in the market right now. And that's just my own opinion. I would like to know why my trades were crossed before hitting the stop loss. Kindly hit our support. Should be support at fxpesa.co.ke. Should get direct help from there. We always respond to all messages in time, and the support runs for 24 hours. So just checking if there's any question I missed. So this is the last question here from Apollo. By the way, what's market sentiment and how is it measured? Is it different from currency meter? So market sentiment is basically the direction that the traders have positioned themselves. So if you take a couple of brokers and you analyze all their clients, if you analyze all their live trades, you'll know that let's say this for the number of people trading the EURUSD, let's say 60% is bullish and 40% is bearish. So in that case, it will tell you the sentiment. So the market sentiment indicator is showing you the direction that the traders have taken their positions. So it basically tells you what they believe about the markets based on the actions they have taken in the markets. So that sentiment changes over time as they close and open new trades, and that's why we track the indicator to see the direction that retail traders are taking. So it's a really good indicator if you know how to use it. I might suggest to check a channel called No Nonsense Forex, and it's a podcast, and they literally describe how you can use that indicator to your own advantage. So thank you very much, guys. Thank you for your time. Remember to check out the latest episode of the Bullish Banter podcast. Also, at the same time, remember that we have links available below for opening a live or a demo trading account. And also, we have a new episode on the Financially Incorrect podcast. And if you're looking to begin your trading journey, then you should check out the Novice to Pro series available on FXPesa YouTube, and that will help you transition quickly. So thank you very much, everyone. Thank you for your time. Remember to like the video and share the video, and that will be more than welcome. Thank you.